Hi, this is Sive Morten with the daily update on EuroFX. I post my exclusive market overviews with the key political and economical events, charts and important levels on the ForexPeaceArmy.com forums weekly. This short video is a response to rapidly changing situation on the currency markets and should help you to stay on top of the game and be profitable. I suggest you to visit ForexPeaceArmy.com forum and read my analysis for the week before watching this daily video.
Welcome everybody, guys. Let's take a look at the gold market. So while we have something to say on the fundamental background on the gold market this week and what we actually did in our weekly report. On the technical side, it's not much to comment, because you can see on Friday it was not really very significant performance despite the non-farm payrolls release. But even in this small performance, we see the strength of the market, and that mostly it confirms our suggestion, because even on the non-farm payrolls turmoil, gold was able to hold at the previous top, and confirms our technical view on the market, because we suggest that at least based on the swings calculation here, that should be the extension leg, and that should lead market right to the OP target at least. Although we expect that it should be new top on the gold market in a few weeks, but currently let's go step by step, and our next target is 1534. So initially, as we said, this AB action was extension, retracement, so contractions type of the ABCD action. Now it was not an extension again to the COP. This was contraction, reaction on the COP, and it means that now we stand in new extension mode right to the OP target. So here we could suggest different patterns. You could easily suggest the butterfly here with the extension somewhere that envelop 1534. And some different patterns, but that actually doesn't change the core. The next destination point somewhere around 1534, 1535. That's the next destination point. What is really crucial for the market right now is to break the 1520 resistance, because that is the level where a market stands for a considerable period of time. It's already has been challenged 3 times. So first challenge, second, third, right at the COPs was in agreement, by the way, while market turns down. And that will be already the 4th attempt to break this area. Why the challenge is important? Because if market will break through it, it will enter to the relatively free space. So here we do not have any resistance right to the previous top. And if market will get there, it will get the significant momentum to challenge this top and create the new high. In addition, according to our weekly chart. So that's approximately what we are watching. It's also interesting stuff that we have put in the weekly report, that today we also take a look at this PDR fund statistics. And we, in particular, were watching for a chart of the storage, how the storage has changed. Because as you know, that all the positions of the fund are backed by the real gold, physical gold, and when the shares of the fund was buying by investors on the market, fund buy the gold on this money, and it triggers the physical demand, and it increases the physical storage of the fund. And if you'll take a look at the chart that we will put today in the weekly report, you will see that while the market was dropping here, the storages of this PDR fund was going higher. And that just confirms, this divergence confirms that the retracement nature of this action. So that's why we're every time talk about this, and because here we see the clear features of the retracement. That is not the major reversal, it's not major retracement that we're watching for a monthly chart. It will happen, but not at the current moment. I would suggest that it has good chances to happen once the XOP will be reached. And then the major pullback could start. So that should happen maybe closer somewhere to the end of the year. And that's also logical, because by the end of the year, the funds, the investors will fix the profit, because the performance on the gold market this year was really very good. And some profit taken before the year end, it's really normal. All these moments coincide right now. The technical picture, the fundamental background, the timing of this process. So it's very close to each other. That's what we will keep an eye on in the gold market in the medium-term view. Now, on the 4-hour time frame chart, we do not have something really special. Market has confirmed just minor retracement, as we have suggested, despite it was non-farm payrolls release. We said in the beginning of on the Friday that if any retracement will happen, because here, guys, was the minor XOP, if you remember, while we said that could be some minor pullback. Any retracement will happen, it will be probably small, because we're in extension mode right now, and it doesn't suggest any deep pullback. And indeed, market was stopped precisely at our confidence support on the hourly chart that we have discussed on Friday. It's around 15 even slightly above it, so 1503. Now take a look. Market has formed another minor grabber that suggests the taking out of the stop, and I think that market will challenge this stop as well. So despite that, overall background looks really positive, and we see the clear picture that market's going higher. The trading process here looks a bit difficult. Why? Because if you have missed the opportunity to go long last week when we talked about it, this based on this grabber, based on overall situation, when we said that, well, overall situation stands so that you could take the long position, but you will have to place some extended stop, because market shows significant volatility, very chopping action, and despite overall bullish sentiment, we do not know where market will start rally. So if you haven't taken the position currently, it's a bit difficult, because you will have to jump in the train right under the major resistance area. And all your hope will be with this grabber. So you could rely on this grabber, and you could hope only on the thing that market will break this area. So if your hopes will be realized by the market, well, very well. You will get the good position, and you will keep it until at least 1535 area. If not, it will be a risky trade, because you do not have currently the good level to play where you could hide your stop. The one thing that you could use is only the lows of the previous session, either below the 1503 or below the grabber pattern. So you could suggest the only pattern actually you could stick with. So if grabber is failed and market suddenly has dropped, that will be the answer on your position. But this is really carries more risk, brings more risk compared to what we had in the beginning of the last week on this week. So that's why you will have to make the intention decision. You should think and make the decision on whether you would like to take part with this or not. Conversely, you just will have to wait for the next retracement. Where it will happen, it's difficult to say. Alternatively, you could try to use the stop entry order as well in the breakout of this area. But in this case, it also will be, well, the distance till the OP target and where you place your stop. I'm not sure that will give you good risk-reward ratio. So every scenario here with the stop, with the taking of the trade carries risk and makes it not really very attractive. So that's the decision that you will have to do, whether you would like to trade it or not. But the most, let's call it logical, it seems currently based trade on grabber. It's the only thing that we have in place right now. So trying to take the position, hiding stop below the grabber lows, and hope that market will break in 1520 area. If market will fail, well, it means that you have the significant risk to lose the money, or at least get nothing, no profit in this trade. So you will have to keep an eye on the performance once your trade will be taken, because that will be a really important moment for the gold challenging on the 1520 resistance. I suggest that this should happen in the beginning of the week, and it will be really vital for the market to break this area, to keep the bullish sentiment.